Good evening, everyone, and thank you for joining today's session on Oracle Tax Reporting Cloud Service, which we often call TRCS. I am Prakhar Singh, and I will be guiding you step by step through this training. Before we begin, let me take a moment to introduce the organization behind the session, the BISP Solutions. BISP Solutions is a leading consulting and training company specializing in Oracle EPM Cloud, BI, and data analysis solutions. Over the year, BISP has helped global clients implement, support, and train their teams on advanced Oracle tools like FCCS, ARCS, and of course TRCS. Their motto is very simple: learning by doing. So if you are here today, you are in the right place. This session is a part of BISP effort to share knowledge with professionals, students, and organizations who want to build careers in Oracle EPM and financial systems. Now let's uh, now let's begin with our session. So let me set the stage for you. This session is designed for the beginners and the people who need the knowledge of TRCS, that how it works, and the new with zero experience who want to start it. And here we will be starting from the basics and gradually moving into the application, creating and navigating through it. So let's start. So before we start it, let's ask one question: that what is TRCS? Why? What is the need of it? So, tax reporting is one of the most critical tasks in finance, where every company, big or small, has to report the tax accurately. Mistaken can cost them money and even reputation that can lead to legal penalties. So TRCS was created to solve these challenges. Our agenda today is simple. First, we will understand the working of TRCS and importance. Then we will walk through the overall process of TRCS, and we will go step by step and how to create a TRCS application, and exploring then the TRCS dashboard. So by end of the session, you will have a clear understanding of how TRCS work and how you can get started with it. Let's begin with the basic. What is TRCS? So TRCS stands for Tax Reporting Cloud Service. It is a part of Oracle EPM Cloud Solutions. In simple language, TRCS is a cloud-based software that helps companies calculate, manage, and report their income tax in a structured and automated way. Here you can say that Excel is like a manual calculator, whereas TRCS is like an intelligent pre-built tax machine that is always updated and can handle multiple countries at once. If we break down this into a smaller parts, let's talk about that. If there is a large organization which operates in multiple countries, each countries have a different tax law, and if they try to calculate tax manually using the Excel sheet or any other software, it becomes messy. There are higher chances of duplications, errors, and delays, and regulators are strict that it should be free from errors and duplication itself. So the TRCS help us solve this by automating the calculation, where there is no need to enter formulas again and again, which reduce the duplications, standardizing the reporting. All entities reports in the same structure under it, reducing the manual work as the no need to as we are don't have to input the formulas again and again. There is a less risk of human error. Then ensuring the compliance. Companies stay in line with the gaps, IFRS, and local rules, and the application is itself installed with it. Let me give you an example. For example, if a multinational company has three subsidiaries, one in India, one in US, and one in Germany, each one of these has different tax rates, different rules on deductions, and different ways of reporting. If the company tries to manage this manually, it will need three different teams, like multiple Excel sheets. Like there will be three Excel sheets of current provisions, and three of that the deferred tax, and three of all the particulars that they have. So it helps us to actually compile it together and bring us the whole data in an easy way, which is actually accurate, less time consuming, and free from like more efforts or hard work. So but the TRCS, each subsidiary enters its own data in the same format through the tax packages, and the system automatically consolidates everything, and the parent company can see one clean tax report at a global level. Here you can see this is the things that I have told about, that the compliance support we do have there, the compliance support, the time saving, accuracy in the reporting, helps global multi entity companies, data integration and automation itself. So now this is why the TRC is important. It saves time, reduce risk, improve accuracy. Now let me quickly compare that TRCS to different Oracle tools such as FCCS, ARCS and PBCS. FCCS refers to the financial consolidation and closed cloud service, handles the financial consolidation, not tax. Whereas ARCS is account reconciliation cloud service, which handles reconciliation, not tax. Now we will understand that what will be the process of actually just we will discuss a minor details about that, what will be the process and how will we be carrying out things in the TRCS. So let's look at the process. Here we will actually first input the data. The step one will be to input the data. It brings the financial data either from the ERP system such as Oracle Fusion, SAP, or even you can go for the Excel upload also. This includes the trial balance, income and expense, that will be your P&L, and the adjustment. Okay, then we come to the step 2, that will be our adjustments. That will be as that we have already pulled the data and put it in the application. Now we have to work on it. So the first thing that we will do under that is adjustment. Adjust the data so that we can calculate the provisions and different things and do automation according to it. So the step 2 is adjustment. Once the data is in, companies record adjustment. Then there under the adjustment, it is actually adjusted in two different ways. One is the permanent difference and second is the temporary difference. Here the permanent differences are that the item that are never taxable, like exempted income or fines. Here we can take donation itself, but there is a just like donation have its differences. It can be partially included or partial or fully excluded. Then here we have the temporary differences, timing difference such as depreciation difference between tax book and accounting books. And instead of depreciation, we can also say that we have provision for bad debts, as the company recorded when it's actually they have recorded it at the time that it could happen, but according to the tax books it is recorded when it actually happens. So it is a time difference. For example, in accounting, you may depreciate a machine over 5 years according to the company's act, according to the company sheet. But for the tax purposes, it may be 3 years. So according to the tax books, you have to depreciate it in a 3-year manner, and under the accounting books, you have to depreciate in 5 years. So there is a time mismatch, you can say. That is a temporary difference. So we have to adjust accordingly. Then after the adjustment, we come to the calculation of current provision, that you can say is the provision calculation, which is the step 3. So the step 3 is provision calculation. TRCS then calculate what the current tax provision and the deferred tax provision is. The current tax is the tax for the year, and the deferred tax is that what will be paid or saved in the future. Meaning, if we can say that, let's take example. In the year 2025, the company ABC, according to the accounting books, here the tax should be 1 lakh. And if we switch it to the taxable, that will be the tax book. The tax here would be 90,000. So the difference between these two is that will be DTA either or DTL. which is deferred tax. And deferred tax here is 90,000. So the difference between the accounting books and the tax book is the DTA or the DTL that we are gonna also study. So this is what you for right now we will just call it the deferred tax, that is 10,000. So both are calculated automatically by TRCS based on the rule that we set and how we automate the data, how we adjust the data. So the step 4 will be automation. This is one of the biggest strengths of the TRCS. Like for we can take example of current tax payable automation, which is a card under and a package under our TRCS application, which directly calculate what we need to pay, the actual amount what we need to pay. Then the tax losses and the credit, that TRCS tracks the carry forward of tax losses and the credit year by year. Then we have deferred tax expenses to equity, which is actually nothing but the systematic system automatically post entries to equity when required. And then we come to our reporting section, which is the step 5. So TRCS generates report for both regional provision and national provision. So the regional provision here refers to the country or the entity level, whereas the national provision refers to the consolidated or at a parent level. We can take another example of this here. Right here is that let's say that there is a company and it has its branch A, B and C. So this ABC is nothing but your regional. But if we come down here and if we actually add this A plus B plus C, which give us Z, which is nothing but your national, which is all rolled over to a single entity or a single parent, you can say. Then we have step 6, which is the summation. Then the final result, when it is reviewed and it is ready to be submitted to the management or the tax regulatories, that is called summation. Right here we can take example. Let's suppose the company has a profit in the in another country, and a small for example we can take that company has a profit in India, but it has a small loss in US and a break even in China. Then TRCS will calculate each entity's tax provision separately, then consolidate it all into global report. For example, if A has a profit of 100 rupees, whereas B has a loss of 20 rupees plus 20, and C has a profit of 50. So here it will consolidate, so here it will calculate all the entities tax provision separately, then it will create a global report. What will it be? Like 100 plus 50, that will be 150 minus 20, it will be 30. It will be 130, and on this we will calculate the tax, the further tax that has to be calculated, which is consolidated. The management can see the effective tax rate for the whole group. So this structure process make TRCS very powerful tool. Then we will come to the creation of application. So there are 3 different types. You can say that one is that the sample application, creation of sample application, create a new application, and migration. We are gonna go all through all 3 of those. So let's start with sample application. When you open the application, you all see 3 practical choices. Each one means a different thing. So here the sample help us in making a ready-made demo of TRCS with the sample entities, tax account, rules and data, which is actually great for exploring the product safely, means practicing it, and you can do a trial run on it, that how it works, what is the meaning of this entity, what this entity do, what are different dimension, what is the use of cube and different thing. Then if we come to the migration, In migration, it helps us in importing an existing TRCS application from one snapshot that already contains the data, settings and everything to another configured application, restoring it as a from restoring it from a backup or bringing it from a client's template. So it can be says that it was in a you actually did a test, you made a test product. Now it is ready to be go in the market, so you took it and put it in a different application. It is a ready product now, fully usable and applicable to all the different things. In a simpler way, I can just tell you that sample equals learning, migrates equals we are reusing it, and new equals when we are making a new project. When we create a new TRCS application, we can see that the system will ask us the few questions or choices. These choices are important because they decide what features your TRCS app will have from day one. Let me explain them in a simple words. Like this is the when you create a new application, this is the first page, naming general, have two questions: what will be the name of the application and what will be the description of. You can't name it more than 8 characters, so you can use a description to name what you are doing or what you are gonna actually work on right here. Then we come to the second page, which is the details, which consists of the time period and years and the currency itself. So time period, you can say that the starting years and the ending year, till what year we want. For example, if we are taking 2020 as a starting year, we want to start our sheet from that, our application from that point of time, then we have to take a year prior to it, that will be 2019. So if I want to make for 2021, I have to take 2020. So here you can see that in the start and the end year I have taken 2022, so I am starting from 2023. My application is starting from 2023 till 2031. And at the left side you can see that the 12 months periods, RTA period and audit period. So here the P1 can be on January, P2 can be Feb, P3 can be March, according to your adjustment at when you are closing the book. Or it can be the regular one, that the P1 can be April, the starting, and the P12 can be March, or either P1 can be January and P12 could be December. And if we are talking about the P13, so it is the RTA period. Here RTA refers to on when you close your books at P12. When you close your books, we can't do any adjustment after that, but we have to rectify some of the numbers. So the RTA period, which is the another section beside it, help us to carry it out. Then we have audit period, which I will explain you while actually working on it. It will be easy to you that you can understand at that point. Then we have currency. Currency is the main currency that you would like to work on, like US dollars, INR, dinars, etc., even pounds. Then we can say that we want multi-currency, we can choose it yes. Then if we go to the second page, the last page, that is actually the features. It consists of different options which we can see right here, that IFRS, CBCR, interim provision, custom dimensions and different others. So these are all the options that you are going to enable or disable according to the client preference. The TRCS application or the application which we work on is actually made according to the client's preference. So here we will if we start with the first one, which is IFRS option. If the company follows the IFRS accounting, we will switch it on. IFRS add a few special reports like deferred tax not recognized and consolidated BTR. If your company only reports under local GAAP, you can keep it off. Think of it like adding an IFRS lens on your tax report. It will it will zoom into more detailing and actually regulations according to the IFRS. Then we do have the CBCR reporting, that is country by country reporting. The global requirement for big multinational companies. This is actually global requirement for big multinational companies, which actually have their workings or their earnings from different country or the subpart. Like we have already talked like about the company which is operating in 3 different section A, B and C. So it is a company that operates in many countries, regulates and even asks for one report showing how much revenue, profit and tasks is in each country. So by enabling this, TRCS automatically creates those reports. So if your company is in 10 countries, TRCS will prepare a country-wise breakdown for you. So next we will come to the interim provision. The interim provision actually many companies need this to calculate tax not only once a year but also every quarter. We can also say that not only quarter but half yearly and even monthly. This option makes TRCS ready for quarterly, half yearly or monthly tax reports. Think of it like TRCS on a quarterly mode, yearly mode or a monthly mode. Okay, so the next option is the custom dimension. Custom dimensions are like when TRCS comes with standard categories like entity, account, years and etc. You have a chance to add 2 extra dimensions according to your choice or the entity's need. Entities here I am referring to the client. So for example, if you can add a business line or a product line, region if you want to analyze tax that way, or you have any other thing you would like that the clients need to be added. So this choice is important because you cannot change it later easily. You have to go through the whole process, remove it from the where it is used, and then you have to remove it fully. So do make sure that what you are making where it is used and it is actually used throughout the procedure, or it is just made and sitting in a corner. Then we have the ownership management. If your group has multiple subsidiaries and holding companies, this features handles ownership percentage. For example, if a parent holds 70% of a subsidiary, a TRCS will automatically take 70% of its tax when consolidating. Without this, you would have to adjust ownership manually. Then we have the another one, that is current tax payable automation. Normally you can calculate the current tax expense, you need to pass it into tax payable account on the balance sheet. So this option actually does it for you. It automatically automates it, so you don't need to copy the same number twice, or you have to calculate and adjust it by yourself through your hard work. Next is the net operating loss, that is the NOL. So the NOL here is that company sometimes makes loss which can be carried forward to the future to save taxes, as some portion of profit is deductible from it, so it can help us in saving the tax. This option makes TRCS automatically track those losses and apply them when possible. If TRCS remembering your tax coupon and using them when they expire. It's just like this. If you have a shopping coupon or any other thing, if you do, this is just an example, you are carrying out shopping online. When you actually shop, you get different coupons that you get notifications on your mobile phones, that are smartphones, that these are valid from this point to this point. And when it is near their expiry, they actually send you multiple notification that it's gonna expire. So this actually works in that way. Then we have RTA bifurcation, that is return to accrual split, that we have already studied, that this is the R13. After filing the tax return, actual members may differ from the earlier provision. Actual numbers may in terms like the current provision, under current provisions, the tax under it. Instead of 1 lakh, it should be 90,000. So there should be RTA adjustment of 10,000. But on P12 the book has been closed. So where will you do it? So there is another section or the columns which is actually named RTA, which you can also go through the period and see it, that the P13. So we will now move to our actually next option, that will be tax losses and credit by the year of expiration. Some tax losses or credit expire after a few years. With this, the TRCS will not only track them but also remind you that which one will expire first. For example, there was a tax loss of 10,000 and it's gonna expire next month. You have two tax losses, that is one is 50,000, one is 10,000, but the 50,000 one will expire after 1 year. So it will tell you that deduct it from the 10,000 one, and it is going to expire way too soon, that is next month itself. So think of it as an edible with the expiry date. TRCS will help you finish the soonest expiry one first. Then we have the deferred tax expense to equity, that is normally the deferred tax that goes to the P&L, but some accounting rules require it to go to equity. For example, the revaluation reserve under the US GAAP, it actually put the revaluation and the equity under some regulations. So this option allows TRCS to handle that automatically, so the financial statements remain accurate. After these all things are carried out and all things have been enabled or disabled according to the need, you will go to the fourth one, that is the last page, that will be the review, where you can see that what time period, what currency, and what all features or options you have chosen and enabled, so that you can see that all the things that are according to the client's need, and if you need to change that there is something wrong, that something you want it to be enabled but is disabled, you can go back, enable it and come back, because after the creation it is way too hard to add a thing or remove one. We can take example of the years itself. When we put the years, if we put 2015 as a prior year or the starting year, we can't go back in time and add that 2014. We can add more, like if the end period is 2030, we can add 5 more years, 10 more years, but we can't go back in that time. Can't add actually data of 2014. So our next step will be that what will be the creation of application. So rather than going through the presentation itself, I will just show you that this is the page that the TRCS will actually the application, the main homepage of the application, TRCS application, and there are different things under it, like there will be a task tab, there will be a navigator, there will be dashboards. Under dashboard there are different things like overview, compliance, operational dashboard, tax provision regional. This is the main card. Under it we have subparts like forms, ETR regional, TAR regional, RTA regional, acquisition, and same the tax provision national has also the same structure. It's because just it's on a different wavelength on a national basis and a regional basis. Then we have interim provision. These all are things that we are working on. Tax is the things we are working on, so the tax will all be already there. Then we have actually enabled interim provision, so we can have interim provision itself. Then the CBCR, if you have enabled it, you will have that. We have different tools, like we have to, if we need to see that what will the navigation flow, who has the control, who are the users, who have the powers, different connection, maintenance, appearance, etc. Then we have applications under it, which is the backbone of the structure, which will help us actually calibrate it, upgrade it, and update it, you can say like that. So without wasting the time, let's switch to our application. So here is the application. Starting with the task, here the task module in TRCS is essential in the command center for users. It actually ensures the tax reporting activities are structured, time bound, and visible to both preparer and reviewer. Here you can see, here's a summary that there are 37, there are total 37 tasks. 0 are late, 0 are due today, and 0 are left in that means due are in 7 days. we change the year to 2019, then here we have no task actually. So in the tax cycle, dozens of users across different countries needs to upload, review and approve data. Without this system, it's become messy with delays, miscommunication. Here it helps us in assigning a task, let them know when it is going to be late, when is the today's task, when means when is the task going to when is that is having a deadline, by 7 days, by today, or by any other date. You can actually customize it also. Then it also helps us in telling that if there is due in 7 days, that means an upcoming task is gonna come at that time or after that. Then the open task and etc. Then we come to the tax national. It is the tax provision national. Now let's talk about one of the most used areas in TRCS, the tax national provision. We are gonna do most of our work on these two, the tax provision national and tax provision regional. This is where each entity prepares its own tax provision. It is a starting point for tax reporting. You start with the package where you enter the trial balance or upload the data. Then you record adjustment or different things in different actually you can say the temporary differences in RTA, TAR and ETR. Then the TRCS calculates current tax and deferred tax. After that, here we can have a peek. Here you can see that under package we have current provision, we have temporary differences, we have deferred tax, and we can also record RTA, which is the difference between earlier provision and filed returns actually. So here it is the current provision, and here's the RTA. We can also pass the TAR adjustment from right here itself. Here we have TAR, which actually reclassify different things like move an entity from expense to equity. And then we have actually our ETR, that is effective tax rate, which shows that the tax as a percentage of profit. Like the tax is 30 rupees out of 100 rupees is our profit and 30 rupees is our tax rate. So 30% is our tax rate out of our profit. And if we go to the tax provision regional, it's actually on a regional level itself. Like we are talking about a company which is actually have its branches under India, USA, China. So it's on those levels. And in national we have all these things consolidated under one sheet itself. So then we have our, I think, pillar 2 right here. Next, yes, pillar 2. So pillar 2 is a new compliance requirement under BEPS 2.0. So we are gonna study it in detail afterwards. Then interim provision that we have already talked about, that it helps us in calculating it monthly, half yearly and quarterly. Then we have actually our total taxes. It gives us a holistic view of all taxes, not just corporate income tax. For example, there are CFOs and board members want to know that what are the total tax contribution, the total tax which is direct plus indirect. Here they don't have the time to just go and see all the taxes, so they want the total taxes. So how it works is that the direct tax includes of income tax and other taxes, that withholding tax you can say, or the indirect tax which has GST, custom duties, etc. So and consolidated report shows all the above tax burdens. For we can take example that if India pays 160 crores of the income tax and 90 crores is the GST, that means the total tax will show 250 crores, helping in total tax transparency, reporting it to the tax agencies. Next we come to CBCR. CBCR is another important module which stands for country by country reporting. Regulators want transparency from multinational companies. They want to know where the profits are earned and where the taxes are paid. So you have to enter the details for each country, that is the revenue, profit, number of employees, tangible assets. Enter the tax paid and tax accrued, and then it will generate a CBCR summary table according to it. It can also produce a XML or Excel file for ready filing itself. That means you just put the data and it will ready a Excel file that you can actually submit it according to that. Then we have actually the approvals. The approver here is the workflow control and the audit trail. As the tax numbers are sensitive, approval ensures accuracy and accountability. Pending approvals, there are like pending approvals. If that you have submitted a project, then it is actually approved or not. Then there is approver, that who has to approve the task. So if you have actually completed the task, is it approved or not? Here we can say the scenario is actual. There is year is 2022 and the period is P12. Here we will apply it. Okay, there are no things, so we'll take 2019 itself. We will apply it. Okay, though no approval unit, approval status. Okay, there is no approval unit or approval status right here. Let me just tell you in actually theoretical way that there are different things. Like there is approver who approves all the projects. Then there is a rejection, that is if you have submitted a project, it is rejected or you have to actually resubmit it. And then there is approved, that means that approver has approved your project. Then pending approvals, that means that this project that you have submitted is yet to be approved. These are all the things that we are gonna actually work in it. Then the next one is library. This is the central repository of knowledge and references. All the data that you have put in this application, all the rules, consolidation, and what you have ever done to take out the data or automate the data itself is within the library. You can access it at any time. As for example, while loading the data, we have loaded the balance sheet itself. The source is our balance sheet. So here you can say that under book data, you can see that balance sheet by source. Here you can see it. The software might take a little bit of time to load. Here you can see it here. Then we do have our applications, the next one. Under applications, let's talk about the different icons under it, where the structure of your TRCS environment is managed. So this is like a admin area. Here you can enter the data, but you define how TRCS works. Then there are tools that will help you in adjusting the application itself. Then there is Academy, where you can see actually the step-by-step videos of how you can do or how you can actually configure the different application, how you can do the taxation, etc. Then there are recommendation, which is actually nothing but actually that what are the error or what we can do for the betterment of our workings. So it can suggest some scenarios like you can do this and that under this year, so that it will be more productive, and it will also help us in recognizing the error. Then we have the IPM. IPM is the actually AI which help us in actually forecasting or actually narration that what is the current tax, and even it can help us in actually telling it like what will the future taxes. So here we have actually covered that what is our dashboard itself right here, and the meaning of what the TRCS, In next session, we will be studying the further that the loading of data and working of different dimensions under it. So today I will be concluding our class right here. Thank you for joining.